to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. Today is March 18th. My name is Cyprian Francis. AJ, good morning. How are you doing, my friend?
Cold. I'm here visiting the mothership of Trading Trainer in Fort Collins, Colorado, and it is not what I had even like a couple weeks ago when I was in Belize City. It's cold.
Well, welcome back. We're glad to have you back. And just in time, we've got a lot going on in the
Oh my
market.
gosh,
A lot more.
what we were talking about last week, like even as we were having our show, things were changing by the minute.
I feel like we were behind on that, right? Like when we were on the show, we were talking about the likelihood of them raising rates.
Yep.
Powell had just come off of the Hill, answering a bunch of questions,
Yep.
and then the background brewing was this bank that I've never really heard of, but
Nah.
everyone somehow now knows what SVB is, Silicone
SVB.
Valley Bank, and their inability to basically handle the withdrawals. Is that kind of where it all started to curtail?
Yeah, there's it's like a perfect storm of what was going on, right? So you've got a bank, and some people are saying because this bank fell below a certain threshold that they weren't under the scrutiny of having all sorts of like stress tests done and people looking over their shoulder like the bigger banks are. This is, even though it fell below that threshold, it is still the 16th, or was the 16th largest bank in the United States. So something happened with that threshold, perhaps. So they weren't being scrutinized. And so they were taking depositors' money and they were totally investing it in these bonds, fully thinking that the bonds, of course, we've been talking about it. They're pegged to the Fed's actions of having low interest rates and having like the bond selling that the Fed is doing, that quantitative easing we keep coming back to. So, or the unwinding of quantitative easing. So they just expected things to stay normal. Like normal to them was zero interest rates, which is insane, and the Fed just buying bonds. Well, the Fed started selling bonds and raising interest rates, making bond yields go down. And so all of a sudden they couldn't, make money. And then they had to like sell some of these bonds at a loss. And then on top of that, they, all of their depositors had this cool app. And most of us have this app now on our phone where we can do transfers and we can do deposits and withdrawals just with a couple clicks of our buds. We don't have to physically like get in the car, go down to the bank and remove our money through filling out paper. We just had like 2 clicks. So people were like, oh my God, there's some news headlines. We better take our money out of this bank and transfer it to more safer banks. And so while we were having our show, depositors started removing their funds. And, all of a sudden this bank became illiquid, and it totally collapsed like overnight.
And I feel like you're spot on with what happened there compared to what's happened in the past, right? It's this like modern version of a bank run, right? And so because they were all mostly tech savvy customers, because it's Silicon Valley, right?
Yeah.
The withdrawal started to come in, the market took wind of that, the stock started to go down. That took the rest of the market down. And since then, right, since Friday, like 1 week later, we've been feeling the whirlwinds of that. But we've also been getting some positive days because there's these actions being taken, right? The Fed came in and basically said, hey, we'll back up all the depositors, right? So they created a new initiative.
Yep.
I think today Signature Bank is in talks to get a little funding from JP Morgan Chase. So what should we take away from the initial concern versus these little backstops that are starting to pop in? Because, on the S&P, we're up 50, we're down 50, we're up 50. What is the takeaway in the long run, or in our perspective of how we approach the markets?
Okay, so let's first talk about the perspective in the long run. I mean, we've been through this almost 15 years to the day. Lehman Brothers had something similar go on, and they had to bring JP Morgan Chase. But the government, the folks that are involved, especially, the actual department that got involved here was the Federal Deposit Insurance Corporation, or the FDIC. And so they're, like you said, they made sure all the depositors were safe, but they did something different this time. And they basically said the depositors can be safe, but the investors, and, this kind of muddies things up, but banks, as you know, are traded on the stock market. And that's something that is fairly new, like in the last 25 years, that banks are allowed to, be traded on the stock market. So any investor in this bank lost their investment, which is different than what happened 15 years ago. Even the investors were bailed out then. And also, the FDIC came in and said, CEO, executives, everybody who was running this bank, you're out. Same with Signature Bank. There's a moving around. And also in Europe, Credit Suisse is having to be bailed out by the Swiss government. So there's this collapse of banks happening. People are actually asking the question of, is this 2008 all over again? Not with the banks in the summertime that, caused that huge collapse, but in March of 2008, we started to see like Lehman Brothers and some of those type of banks starting to fail. So people are a little bit concerned and on edge, but they're kind of hanging their hat on the fact that maybe the government knows better based on what has happened before, how to deal with this. And so people have their fingers crossed.
And so for us as, modest investors, right? We talked about this on the show last week. When the uncertainty starts to increase, that's good for your
Yeah.
strategy. That's good for the types of trading approaches that you make. I do want to ask one question, because I saw this headline, and to me, this like epitomizes why options trading is a wonderful tool. Is I saw a quote that some guy, before the SVB collapse, took a $9,000 investment and purchased, I believe, some puts, and that $9,000 investment turned into like 2 or 3 million in a day or two. And so,
Mhm.
is that possible with options? Like,
Oh, yeah.
that's crazy for me to think, but we just had an example of it.
Yeah, so that's using options as leverage. That kind of, I mean, who would have known? So he kind of was playing the roulette wheel and he won big time. Anybody who was on the call side of that equation lost big time. But yeah, it's totally possible. That's what leverage is all about. So he totally leveraged a down trade. Now the question is will he actually get paid? And paper, he's made those gains, but now he's actually got to get paid by those people who sold him the puts. But I want to show you this chart, Sip, on the VIX. So the VIX, if you guys remember, shows us the uncertainty. And let me switch over to candles so you can see it a little bit better. It measures the uncertainty of investors. Like, are they fearful or are they confident? And whenever we're above this white dotted line, we're fearful or uncertain. And so, yeah, well, just in the last 5 days since we had our show last week, the uncertainty has gone up like by a whole step function. And the question is if the uncertainty is like that, what side of the equation? Now, you can't believe the talking heads on TV because they'll tell you, like, oh, the banking sector lost this many trillions of dollars in the markets today. That's never accurate. And I always get like, it makes me feel upset when they say that on the news, because in reality, money isn't lost in the markets. It just goes from one hand to the other. So the question is how can I be on the correct side of the equation? So our strategy of selling premium SIP, when we sell options, we're going to get this higher price based on the fear and uncertainty. So being the seller of options when you've got fear and uncertainty in the market is the place to be. And so again, we as premium sellers are positioned perfectly for what's happening in the market right now.
And I feel like last week we had a good discussion on how to get into a potential VIX trade. So if you want to head on over to the
Mm-hmm.
YouTube and check that out. Otherwise, we've got some economic news coming out, but
We
does
do.
it overshadow what's happening
I
in right? And so that's kind of the pendulum we're trying to figure out.
So last week it would have been a big deal, right? Last week we were talking about what the Fed is going to do. And so this is the week every month where we get all sorts of economic news. So we got our consumer price index on Tuesday, which is a measure of cost inflation at the consumer level. We've got our producers price index on Wednesday. Did I say Wednesday? I meant Tuesday. And then on Wednesday, we got producers price index. We got an idea of retail sales prices. We got our housing starts and permits. This is our big news week every week. And then today, this morning, we got our industrial production numbers. So if you're looking at just economic news, we basically on producers price index, retail sales, and on industrial production, these are all like in the different areas of producing a good, those numbers have come down. Those Fed tactics are taking hold, and those numbers have come down. Housing starts, interestingly enough, went up. And the only thing that I can associate with the housing starts kind of going up is that, you know, for a decade now, housing starts have been lower than the demand out in the market. And so, despite everything that's going on with loans and everything, there's just an under amount of houses for everybody to live in here in the States. And so, that's my only explanation for why housing starts are going up. And the consumer's price index was still higher. Like it didn't change much and it came in right at expectation, but it is higher than the Fed would like. And the only thing that I didn't really get a representation on is services. So going to restaurants, getting people to come clean your house. And that's really where inflation has kind of stuck. Those services are still more expensive than ever. And so, what the Fed would be faced with all of this news is should we be raising interest rates next week? Because next week is the next Fed meeting. Should we be raising those interest rates? And last week, the question was, is it going to be a quarter point or is it going to be a half point? And this is the CME Group's kind of informal poll from investors. Well, this week, because the Fed, they can't have the banking sector fail. They can't have that fail. So the question is the Fed going to like slow down now that these banks are starting to fail? Because remember, everybody in the economic world knows that a Fed decision to raise or lower interest rates and a Fed decision to buy or sell bonds, it takes like 6 months to a year for it to actually have an effect on the economy. And the Fed did so much activity in 2022, doing a record breaking 3/4 point rate hike 4 times in a row. And then, so the question is, did they do too much too soon and not let the effects come through? And that's why we're starting to see banks fail. So all of a sudden, investors have changed their tune. There's no longer, like, if you look down here, there's no longer any investor that thinks there's going to be a half point rate hike. It's gone from what we were seeing last week to now 0, right? This is the quarter point rate hike. So now 70% of investors think that maybe the Fed will raise rates by a quarter point. And now we've got this huge contingent. Almost 30% of investors are like, the Fed's going to sit on their hands because the Fed's got a bigger problem right now. Instead of just worrying about inflation and worrying about employment, they got to worry about whether or not they effed up the whole system, right?
Yeah, and to double down on that question of what did the Fed do too much too fast? If a bank is failing because of those actions, then I think the answer is yes, right? Because
Mm-hmm.
if those guys need $30 billion to remedy the situation, it's almost like, well, you are doing too much too fast. It's having ramifications, and
chill out.
even if the inflation keeps rising, right? Like do you have to pick one or the other? What is it? Banks failing or inflation? I think people will just let the inflation creep up a little bit to have the
Because there's still a question as to whether that 2% target of the Feds is actually even a valid target. You'll even see right here, I'm just pointing out, this is that Fed bond selling. Look, the Fed took a break from selling bonds, right? So they know, they're like, oh crap. So nobody knows what they're going to do. And by the way, their decisions around policy are based on the same data we have for, everything has become so transparent with data reports right on the web, data reports on our phone, the ability to move our money around. So the scoop is if I was the Fed, I think that I would probably, play it cool and just, take a break and let's see what happens over the next month or so before I start making more decisions. But again, they're going to make decisions based on what data they have in front of them, aren't they?
Yeah, and so my question is to that, do we know if there's other banks that are in similar trouble, right? Are the regulators now going at some of these other banks and saying, "Hey, you guys might be in a similar situation as SVB. We need to do a stress test." Um,
It's behind closed doors what's going on, but legally, based on what happened in 2018, a lot of those rules that were put in place after the last big deal back in 2008, 2009, those were called the Dodd-Frank rules. Those were kind of gutted a little bit, and a lot, except for the biggest of biggest banks, a lot of these smaller banks no longer had to comply. They kind of like lobbied our lawmakers, and it was not a Republican or Democrat thing. It was both sides were like, yeah, let's take some of the teeth out of these rules. Now, we don't know if some of the executive branch type people that can just, come in and do things based on a signature are in there now making sure, and we won't know, right? But we've got to, and I know that there will probably be some congressional like hearings, but those, we all know that our Congress is kind of broken. They're just infighting. This whole thing that's coming up about should we pass the budget based on the debt ceiling and all that stuff. I mean, that's just a bunch of people getting together that probably, that's the story with elected officials. They usually don't have to have many qualifications. They just have to be dumb enough to put their hat in the ring to get elected. So you got all these kind of yahoos in there trying to come to a consensus. And I mean, that's democracy, isn't it? So I'm not sure you were going to see anything out of the Congress besides finger pointing. But I have a feeling that there is some behind the scenes kind of stress tests being performed, but we won't know. We won't know. We just got to kind of go on our sentiment here. And that brings me back to what we do, Sip. If you're smart enough, I mean, here I am showing the S&P 500. And I have to say that our retracement analysis, which is totally based on statistics and math, this line, descending line of support and this descending line of resistance, they are proving to be like spot on. And so we just come back to our tried and true analysis methods, which says our medium-term trend is a little bit on the downside. But then if I zoom out to our long-term trend is totally sideways choppy. And so I would be premium selling right now. In fact, I got to say, you know how my group SIP meets every Thursday? We came up with so many candidates. This is the list from last Thursday. So many candidates that are just ripe for premium selling. Yesterday, we made a perfect trade plan around selling premium against Macy's. And, Macy's looks like it's a no-brainer to sell premium against. Just make sure when things are tumultuous that you think through the situation and you use what kind of investment vehicles you can that are actually going to profit. And so I got to give one more endorsement to our premium selling, because premium selling is what you should be doing right now when the wheels are rolling off of the vehicle.
That's right. And if you're not sure of what premium selling is, if you haven't been tuning into the show, we've got a wonderful workshop, a free workshop where AJ's get to break down all of these strategies that he uses to take advantage of the volatility, to use premium selling as a tool, as an investment vehicle. And I'm going to go ahead and throw the link to that in the chat. We're going to go ahead and take a break. AJ's gonna break down his pick of the week, so his premium selling trade that he's looking at. We've got some questions from some of the viewers from the week, and as always, we're streaming live, so if you have a question that you want AJ to go over in real time, feel free to throw it in the chat, and we'll see if we have time to go over it. Otherwise,
Absolutely,
we'll be back in a couple of seconds and get AJ's pick of the week.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I gotta say, there's never been a better time to go and watch that, seeing as the volatility is starting to increase. And if you want to protect yourself, options are a great way to take advantage of falling markets. So the link to that is in the chat. I know that in our trending topic, do we want to go over the balancing the budget? Do you want to touch on that real quick?
I mean, I just wanted to show people, I've been playing this game, and I don't know if you want to put that URL into the chat for people, but there's a game online that has been created by the Bipartisan Policy Center. So this is a bunch of economists. It's not, again, any sort of conservative versus liberal or Republican versus Democrat. It's a pretty cool game. And it allows you to try to balance the budget the way that the government is trying to do. So, you got to make some really careful decisions. You can figure out, there's a questionnaire about what your goals are. And so if you answer that question, your personal goals, do you care about climate change? Do you care about making sure that there's safety nets in the form of Medicare, Medicaid, and Social Security? What are and then what are your priorities? And then they come in and they're like, okay, if you want to try to balance the budget, here are the things that you can increase or decrease. And here are the things you can increase or decrease as far as bringing money in to pay for those things. So, it's been fun. And it's been interesting for me, and I just want to give people a chance and give them this URL so they could play the game too. But it really is difficult based on where we are right now. And I think the most recent budget thing that they've got is the 2022. But it's interesting. You can see what effect does taxing people with higher income actually have? What effect does reducing Social Security or reducing Medicare actually have? What effects do these things actually have? And can you come to a balanced budget? So far, I have not been able to balance the budget. And so I have no idea. It's like an eye opener for me to see what it is. Because for instance, I think one of the things that should really be invested in is education for our little ones, our youth. So I was pumping up education, and I saw how little effect that actually had on the budget. So I wanted to throw that out there. I don't know how much we need to discuss on it.
What are we over?
Not easy.
Yeah, how much are you over?
Oh God, I can't get it. Right now, I think it's $1.1 trillion deficit in the budget every year, which is not sustainable at all. I have only been able to get it, even in my best case, I'm still in a deficit of $200 billion. So, Yeah,
It's
it's
Yeah,
hard.
this is interesting. I definitely threw the link into the chat. I'm gonna play with this a little bit later. The first thing that comes to me is that defense. Like, I always feel that we as a country spend way too much on defense, defending our borders from Mexico and Canada. So,
I mean, the truth is though, that's our claim to fame. Like, we're not good at anything else besides like the military industrial complex. So you got to be careful. But look at how much we spend on just making sure our nuclear weapons stay intact. I mean, that's like enough to like fund education for everybody in the United States for
what
free
is that?
for like
500 billion? Is that what that is?
no, it's 30 billion just to keep the weapons intact, these aging weapons. It's interesting.
All right. Well, first and foremost, we got to make sure that our banks are stable and
Yeah.
that we can take our money out, and then we can get back to addressing the budget. But that's a very interesting perspective, and I think folks should check that out because there are a lot of decisions, and sometimes we get the feedback from the media without really knowing the details, and that's a great way to look at it.
Sip, can we put it out there that if anybody who's watching the show or watching the show on a replay can actually succeed in balancing the budget, they should totally send us a screenshot of how they did it?
Totally, totally. So just to double down on that, if anybody balances the budget with that tool, let us know. We'll discuss it. We'll review it.
Well, and not only that, I think we'll send them some trading trainer swag. I have some swag in I just found it here in the Colorado office. So we'll reach out to you privately and we'll get your contact information if you can do it. And we'll send you like a hat or something. That would be
All
awesome.
right, I'm gonna jump right on it as soon as we finish the show. I'm very interested. Uh,
Sip, you can have a hat. You don't need to balance the budget in my eyes.
uh,
But anyway,
all right. So since we got all this news, coming out, banks are failing. People are concerned about taking money out of their banks, out of their deposits. What can we do? What are our opportunities to take advantage of that? And I think you might have a play here with your pick of the
yeah.
week. And so your pick of the week this week is Citigroup, ticker symbol C.
Yep. Citigroup is a candidate, and this was actually brought up to the attention of my group yesterday. But Citigroup is one that I have been selling premium against for quite some time. This is one of the banks that did not slip through the cracks. They are under heavy scrutiny to meet like quarterly like stress tests. They have to have a certain amount of money so that they can bail themselves out. They did not fit, they did not. Uh, they fared well through the crisis 15 years ago, but they are under scrutiny. So I don't feel at all worried about Citigroup having any problems. They are doing well with their earnings, as you can see here, and they give a lot of money back in the form of dividends to their investors, which we like as premium sellers because if they're giving money back to investors, number one, we can roll that into our strategy. But number two, that means that the investors, because they're making a nice chunk off of dividends, aren't going to be pushing Citigroup to have their stock price change much. And so we like that sideways choppy movement that I'm showing here with Citigroup. And so if you take a look over here, Citigroup is coming and testing this level of support. So despite Citigroup being a pretty solid bank, they still were under just the public sentiment of being a bank. All the banks like got hit last week when Silicon Valley Bank and Signet Bank and our Signature Bank and Credit Suisse hit some troubles. So they came back down to this level of support, which gives us premium sellers an amazing opportunity, and that is to kind of stock up on either Citigroup, the stock, or if we want to do a leverage play, we could find kind of a deep in the money, far out in time option to replace that stock. So I'm talking about a June, let's go with January 2024. So that's more than 8 months out in time, expiration date. And here's a little trick. We come over here and we look at the option chain, and I'm going to look at those January 2024 options right here. expiring January 19th, 2024. And you'll notice I have a couple of columns here. One of them is the extrinsic value column, and the other one is the mark column. So if you take whatever the extrinsic value is and you divide it by the mark, you'll get a percentage, right? And so I'm going to do that right here. What I'm looking for is less than 5% extrinsic value. So if I bring my calculator over, this will tell you how deep in the money you should go when you're going to replace the stock in the case of our premium selling with an option. So say, for instance, I take a look at this $35 call, and my extrinsic value is $279 and my mark is $11,675. So I go $2.79. It just changed, but I'll use sure. 279 divided by $11.67.5. And so you'll see that this is 24% extrinsic. Again, we want to target less than 5%. So we have to go deeper in the money. Let's go all the way to, I'm kind of looking at these. Let's go all the way down to the $25 strike price. If we take a look at the $25 strike price, again, extrinsic divided by mark, 83 cents divided by $19.70. 83 cents divided by $19.70. You'll get 4.2%. That's below our 5% threshold. This is a great option. And you can see there's open interest. The bid-ask spread shows that there's actually buyers and sellers there. So you wouldn't have any problem buying and selling this. There's actual volume today. So this $25 call would be a perfect substitute. So instead of spending $43.94 per share, we would spend only $19.72 per share on this alternative. And so stocking up on either the stocking up, that was a play on words, buying either the stock or that back month option that we just devised would be really great here, because then we would be totally set up for our premium selling, and we'd be able to do that month in and month out, just like cyclic, turn it into an income trade, be on the correct side of that equation.
And so the logic here is that Citigroup is better positioned to weather the storm, and in eight months that could turn into a profitable bet. And this is one way to approach it with the lower amount of capital, right?
Well, and not only 8 months, that would be for cashing in on the back end, which is totally possible. But in addition, that would be setting us up for a monthly, or if you're using weekly options, weekly kind of like paycheck, because we'd sell income against this initial position we're setting up today. I would wait, and this is just a disclaimer, I would wait to make sure that this level around $44 holds. So I'd wait probably until next week, and I'd make sure that that $44 level holds. So it's a little bit premature here. I'm using a MACD that's been tweaked a little bit. I'm using 6 and 19 for my exponential moving averages, and then the 3 for the MACD average. So I haven't seen a crossing yet. So I want to see a crossing. So let's wait until early next week to make sure that this is going to be our bottom. But if it proves to be the bottom, I'm going to be stocking up on probably that back month option, that less expensive investment.
All right. So Citigroup's looking like it's one of the potential, they can live out the storm. And so a question just came in on the chat to another name that I keep seeing as a positive banking financial institution, and that's Schwab. So can we take a look at that real quick?
Yeah, sure. SCHW. And so Schwab got affected a little bit more. In fact, let me clear some of these drawings that I have here from a previous analysis. So Schwab is a little bit more, so things got muddy at the end of the 90s when President Clinton and the Congress at the time said it was okay to mix up brokers with banks. And so things got kind of muddy between, well, is it a bank where we can put our money and feel confident that our money would be there even in the worst crisis? Or are we a broker where there's some risk, and you understand that when you do business with a broker. Well, it got muddy about 25 years ago. And so Schwab is one of those ones that it's a bank, but it's also a broker, and it leans more to the broker side. And it's a big broker, right? It's acquired TD Ameritrade recently. It's been on an acquisition place. They're a big broker, but yet public sentiment, which you can see in the charts, has kind of knocked it on its teeth. I would wait to do anything with Schwab. First of all, Schwab was not, they dropped from about $75 down to $55. Let's wait to see if it recovers from this drop, or if it establishes a new sideways channel at this lower price rate. And so our rule of thumb here at the Premium Sellers group is that we want to see a test of support, or 2 tests of support and 2 tests of resistance before we start selling premium against something. So Schwab, we need to let mature a little bit, find out what's happening. So I'd hold off on trying to sell premium against Schwab. Schwab is more of kind of a speculative play right now.
All right. So hopefully that sheds some light on Schwab. Thank you for the question. We've got 3 names that we've got some of our viewers that have brought to our attention this week. So let's go ahead and run through them. This is Clyde from Fort Worth, Texas. He's interested in a popular COVID name or COVID stock, and that's AMC, ticker symbol AMC, the movie theater chain.
Remember GameStop and remember AMC when that happened? That was with the whole Reddit and the public sentiment, public kind of forming a tribe online and being able to compete against the big fund makers, and how Wall Street kind of had an allergic reaction to that. AMC's been in the news also recently. They're thinking about, I don't know if they've implemented yet because I haven't been to a movie theater in years, but they are trying to implement like pay for seating, meaning if you want the good seats in the theater, you're going to pay higher than if you want that front row seat where you're going to crank your neck. So that's been something interesting to follow for being in the news. Generally, when a company is in the news for any reason, we don't like to sell premium on it. But I think that little news blip was more kind of like just humorous than it was going to affect investors. But let's take a look at the chart. So a couple things I noticed right away. AMC, they don't make money. That's why every quarter their earnings are negative. They're not giving money back to their investors. So if you're going to sell premium against AMC, just know that it's not the most solid stock. It's kind of being propped up by investors that just don't want to see it go. But in the long run, it's not a business that's being if it stays at its current rate, it's not a business that'll last more than a few more years. With that said, technically, I've got my 2 tests of support down here at $4, and it looks like I'm testing resistance probably up here at this maybe $6 to $7 range. And so here's what I would say. If you want to play a play on this, this is totally something. Again, I'd wait, just like I said, let's wait for Citigroup. I'd wait for confirmation that $4 is going to hold, but let's buy some AMC stock. It's so gosh darn cheap. And I do know if we take a look at the option chain, and I'm going to look at this July 2023, it's trading every dollar. So that gives us option traders the ability to really design a cool position around it with, the exactly where we want our positions to be. And the options are traded. Look, there's open interest, there's volume, the bid-ask spread is not large. And so there is, this stock does get traded. So let's buy some stock. And then what we'll do, here's my idea. So this shows how flexible our premium selling trades are, SIP, because if we say 6 down to 4 is our channel, what we can do is we can give ourselves a threshold. We can say we'll buy the stock, and if it goes up anywhere below $6 and about 75 cents, so long as it stays below there and finds a top, we'll go ahead and turn it into one of our premium selling trades. We'll sell a call option up here. We'll buy our protective put, rinse and repeat, rinse and repeat. However, if it does go above 675, then let's just sell that stock, take our profit, run, and use that big gain. I mean, 4 to 675 is like a 75% gain. Let's go ahead and take that money and make a new trade out of it with a different ticker. So that's so flexible. That would be the play that I would play on AMC. Thanks for that person in Fort Worth, Texas.
Yeah, I think the cost of the stock being so low makes this an interesting investment. Also,
Yeah.
you're right. There could be other news, and because there's so many people that have AMC that have traded AMC, things like that could increase the in a couple of days, right? In a very quick clip. So
Yeah, you're right.
So that's one that I think definitely is worth looking at. I wish they would innovate, because you're right. I haven't been to a movie theater in quite some time either, and
Yeah.
I miss it. The good old days, AJ.
Yeah. Yeah.
All
Yeah.
right. Moving on to an ecom play, and this is Julian from Reno, Nevada, interested in Wayfair, ticker symbol W. I believe they're the furniture store, right?
Yeah. Wayfair is just what you need. Okay. So they had a real uptick. They went from where their level of support, and they've got this level of support that's pretty established. It's down here at about $30, and something exciting happened that caused their price to just about, or just a little more than double. But what goes up must come right back down, and so they're showing that $30 played through, and we have actually a level of resistance here at about 45, maybe a little less, 42 and a half. This is a great premium trade as well. It's not on my radar, but it is now. Let's look at the option chain to see how healthy, because when we want to create a premium trade, one of the criteria is that we have to have people trading the options. If you don't have people trading the options, then the stock pattern can be as beautiful as can be, but you're not going to be able to trade options on it. Yeah. It's trading every $5. So Wayfair has the more traditional increment between strike prices. But when I look at the chart, if I were to come over here and say, well, I could put an option on at 40 or 35 or 30 or 45 or 25, that's fine. I don't need the every dollar increment when I start to get higher in price. So yeah, I see that you're in a great opportunity. Same thing I've been saying for the previous stocks, the one that I featured, which was Citigroup, and then the one that on our fast analysis on AMC. I do want to make sure that this is a bottom forming. I see that my fast MACD says it is, but my fast MACD also didn't get validation today that it is a bottom. So you want to make sure that you don't start buying stock unless it really is at the bottom of the move. So make sure that happens, but then either buying some Wayfair stock, and make sure if you're going to do the option selling on it, you have to buy it in lots of 100 shares, or let's see if there is a possibility for a substitute. So we'll come over here to the January 2024. We'll pull up our calculator like we did for Citigroup. We're going to take extrinsic and divide by mark. Probably, maybe we won't have a substitute, because if I come over here and I take $2.60 and divide it by $18.60, It still is a 14% ratio. We need to get that ratio below 5%. So maybe you're going to have to buy the stock rather than use an option substitute, which is fine. It's just a little bit more expensive. But if you've got the money, I would buy 100 shares of this. Make sure that you've factored in how much risk you're taking on and size your position accordingly. We always go with risk management. If you need more on that, you should become part of my group, because that's all we focus on, is managing our risk. But yeah, I see that there's a potential here. 30 and then up to 42.50. Sip, you got any insights on it?
It just looks like that support there is pretty solid, and
Yeah.
so there probably are some fundamental reasons why that continues to find itself. It's unfortunate you don't have the substitute, and you got to go with the straight stock. But in terms of setups, it's got that probability, or it looks like it could tick up. I'd love to find out why it did the last few
Yeah.
months, right?
Yeah, I'd have to go back. We call that in our program, SIP, we call that a soft data analysis. So we look at just the news headlines, right? We don't really worry about reading the news articles, but we go back to that time frame and we look at what kind of headlines were causing that uptick, because that is interesting. I'd have to dig in deeper, but from a technical perspective, yeah, if this bottoms out, this would be a good time to buy stock. I also would want to, in my soft data analysis, wonder why this company can't turn a profit. I see pretty big losses at the last two earnings plays. So it requires a little bit of a look at the underlying symbol. I'm guessing that our participant in Reno, Nevada has looked at the company, but I would take a deep dive into the company's fundamentals, just make sure it's solid enough and find out why this blip happened. But yeah, technically, this is setting up nicely for a premium trade.
All right. So moving on from a quote unquote unprofitable company to a company I hope is making a lot of profit. And this is Laura's question from Sacramento, California. And she's interested in our favorite, my favorite, one of my favorites, Amazon, ticker symbol AMZN, Amazon.
Expensive. So Amazon, I say it's expensive because it's trading close to $100. So maybe using a strategy like premium selling might be out of, for most people's portfolios, it might be too expensive, even if we used a substitute stock. But one thing I like about Amazon is this would be a candidate I'd like to start accumulating in my portfolio for the long term. So with that in mind, there's an option strategy that we use when we want to do that, when we want to buy stock for the long term to have in our portfolio. And that would be to sell cash secured puts, sometimes called selling naked puts. And so that's probably what I would do here. So what's nice about doing that is you pick the price that you're willing to buy the stock for. Say like, I'm willing to pay $95 for this stock, not a penny more. So what are my options for doing that? I could put a limit order in and say, only buy this stock if it comes down to $95. But wouldn't it be cool if we could put this order in, and if it doesn't get filled, or even if it does get filled, earn a little bit of income off of it? That would help us reduce the price. So if we earn, say, $1 or $2 for placing the trade, and then we buy, somebody says, okay, I'll sell it to you for $95. In effect, it would only cost you like $93 or $94 because you made that $1 or $2. And by the way, if nobody decides to sell it to you for $95, you've still made that little income. Let me show you how to do that. So you come over here to the option chain and you go for a near-term option. So we have options expiring today. So that's a little too near. But if I go for the one that's expiring in April, and I go for that $95 price, wow, it's even more than $1 or $2. If I was to sell the $95 put, I would be able to get $3.32 per share. And so, you sell these things in lots of 100. So I'd get $332. And basically what I've been setting myself up to is between now and April 21st, somebody would come to me and say, hey, I'll sell you Amazon stock for $95, and I'd buy it for $95. So you have to have the $95 per share, the $95 in cash ready to go. But if nobody decides to sell it to you, you still get to keep this $332.50. So this is a better way to buy stock than just putting a limit order in, because here I get to buy the stock at the exact price I want to buy it at. And whether or not I buy it at that price, whether somebody's willing to sell it to me is beside the point. I'm still going to get $332.50 every time I place this trade, which could be monthly. So why not sell some naked puts, sell some cash secured puts? That's what I would do here.
What's crazy about Amazon is when you say it's expensive at 100 and it used to trade at like 1,200 a share, right?
Mm-hmm. That's right. They had that reverse split. They kind of had, what would I say? They kind of had the same kind of thought that Apple did, which was, hey, maybe my investors might also be my loyal fans, my loyal users of my products. And we should figure out a way to reduce our stock price so that our users can afford us. So that's kind of the thought process behind reverse splits, which is split or reverse split.
Yeah, and I mean, Amazon just is on top of product development. I mean, over the past couple of decades, like they really have quality products.
I mean, they went from books to just selling
To a
books
movie
to
studio
oh my
down the
goodness.
street.
They're a media company. They're everything.
Awesome. So we did have another question here come in that I thought is relevant and would warrant your feedback, and that's with all the uncertainty taking place, is there a play in metals like gold or silver? Is there a flight to quality there?
Well, yeah. I mean, the scoop is so in the equities world, we can find an ETF that follows gold, but there's plenty of gold like mining companies that we would invest in. AUI is the one that comes to my mind right away. So this is Yamana Gold. And so we could totally make a play off that, maybe a swing trade where you would look for the movement. And this actually right here is exactly what you would want to see in a swing trade, where you have this long-term trend, and then you had a temporary pull back against that trend, and now you've got this swinging back up. It's going to try to meet the trend where it would have been. And so you can totally capitalize on this directional movement. So yeah, I would say that anything on these kind of hedges against total breakdown in the markets might be worth trading. And if you're going to do an options trade, you could either do the options against an ETF that tracks gold, or you could do it on these gold mining companies. I think that might be a smart idea. I would do it as a hedge. So size it accordingly as a hedge rather than doing it as kind of a main trade.
All right. Thank you for that, AJ. Thank you for the question. Lots to dig through this week. A lot of things going on in the market, a lot of opportunities. And so we want to give everybody that's watching and listening an opportunity to get some of AJ's education, some of his materials. And he's got a wonderful section on his website where he gives away papers, courses, videos, indicators, math equations, things like that. And so I'm going to go ahead and throw the link to that in the chat if you're interested in learning more, getting some more quality education. The link is in there. We did get one last question maybe before we close the show out, and that's DVN, ticker symbol DVN.
Devon Energy. So Devon Energy, Here's the scoop on Devon Energy. We want to let it bottom. So I guess that's the theme of the day. Let's let it bottom. Devon Energy is forming a new low over the last year. Let me actually go back even further. I always like to just so Devon Energy, okay. It's really breaking through the levels of support here. And so I wouldn't want to make this into a premium trade just yet. I need to find out whether or not we've got a mature sideways channel. So we need 2 tests of support, 2 tests of resistance. So I want to find out about that. As far as maybe a swing trade, I mean, again, I'm not a big speculator, but maybe you'd be able to trade something off of this breakout down. Not a swing trade, a breakout trade. But, I would use this would be more of a kind of a fun play. And if you lost the whole investment, you wouldn't be sad. So do a small play on Devon Energy. But it's broken through major support at $50. And so I need to, before I do any sort of income generating on it, I need to have it stabilize.
Yeah, I assume that's part of the downfall in commodities, because I've been seeing oil getting hit pretty hard the last couple of days. So lots of opportunities, lots of different ways to approach the market, right? AJ always sides on being, taking the risk into consideration, having your stop losses, knowing what you can gain, what you can lose, and all that information, all that education is in the chat. There's links there. Go ahead and check it out. I think that concludes the show, AJ. It's options expiration. It's the middle of March. I think it's St. Patrick's Day, right?
Maybe Patrick's Day.
Hey, go close the computer down. Go have a Guinness. Yeah.
Yeah. Make sure it's dyed green.
That's right. All right. Well, in the meantime, if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. If you have any other questions along the way, leave it in the comments, send us a DM, and someone will get back to you as soon as we can. Otherwise, appreciate you tuning in. AJ, thank you for your time. Thank you, everybody, for tuning in. We'll catch you guys next week.
All right. Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.